Broadcom, AVGO earnings this quarter and what's coming next. Let's hear it from Nong L and PM. Earning Review Podcast, the true big player.
Welcome to the deep dive. You know, it's pretty amazing how quickly some tech companies can spot a trend, right? And not just spot it, but really position themselves perfectly to, well, ride that wave. It's like watching a master surfer catch just the right set. Today, we're doing a deep dive into exactly that, looking at Broadcom Inc. and their latest financial results, just announced for Q3 fiscal 2025. We've got all the source materials, the official statements, earnings call transcripts, the whole lot, and our job here is to distill it, to figure out what really matters for you. So we're going beyond the headlines, trying to understand the forces driving this tech giant. Record revenues, profits surging. There's a lot going on. Okay, let's unpack this.
Yeah, and just to set the scene quickly, Broadcom, based out in Palo Alto, California, they're a huge player, global leader in semiconductors, infrastructure, software solutions, the foundational stuff. And these Q3 results, they cover the period ending August 3rd, just announced September 4th. And honestly, they show an exceptionally strong quarter. It seems largely driven by some very specific, very powerful market dynamics happening right now.
Okay, so strong performance. Let's put some numbers on that. You said record revenue.
Record revenue, yeah. For Q3, $15,952 million.
Wow. And that's up, what, 22% from last year?
Exactly, 22% year over year, which is substantial growth at this scale.
But here's where it gets really interesting, I think. The GAAP net income, it hit $4,140 million this quarter, which sounds good, but get this. Q3 last year, they posted a loss of $1,875 million.
That's the jaw dropper, a massive swing.
It really is. A huge turnaround in just a year.
Yeah.
And even the non-GAAP net income looks really healthy, right? $8,404 million, up from about $6.1 billion.
It's fascinating, that scale of change in 12 months. I mean, 22% revenue growth is already impressive for a company Broadcom size. It signals really strong escalating demand. But that shift from a GAAP net loss to a big profit, that's significant.
What does it usually point to?
Well, it often suggests more than just market conditions improving. It could be really successful strategic moves paying off, maybe integrating acquisitions well, or finding some major operational efficiencies. We should definitely look into that.
Okay.
And you mentioned GAAP versus non-GAAP. That's always a key point. It tells you how the company itself wants you to see its underlying performance, sometimes smoothing out certain accounting factors. We'll need to circle back to that distinction.
Definitely. So with those kinds of headline numbers, what's the main driver here? What's really pushing Broadcom forward like this? Because growth like at their scale, it doesn't just happen.
No, you're absolutely right. It's definitely not by chance. And the CEO, Hock Tan, was actually very direct about it.
Oh yeah, what did he say?
He said, and I'm quoting roughly here, that the record Q3 revenue came from continued strength in custom AI accelerators, networking, and VMware.
AI accelerators.
Exactly. But get this, the AI-specific revenue growth actually accelerated in Q3. It hit 63% year over year.
63%.
Reaching $5.2 billion just from AI. So it's not just growth, it's accelerating growth. That points to some serious momentum.
Okay, custom AI accelerators. That term sounds important. Can you break that down a bit? What exactly are these things, and why are they suddenly in such high demand?
Right. So these aren't your standard off-the-shelf chips. Think highly specialized semiconductors. They're basically designed, often co-designed, with a specific customer.
Custom built.
Exactly. Tailored for the incredibly heavy-duty number crunching needed for advanced AI, machine learning, that sort of thing. They're like bespoke engines for specific AI tasks. Super efficient, super fast for that customer's workload.
So it's less about selling a generic product and more about deep partnerships.
Precisely. It creates these really tight, sticky relationships with a few very large players who are pouring billions into their AI infrastructure.
Which sounds like a massive opportunity for Broadcom.
Huge opportunity. But, there's also a flip side. It means there's a degree of reliance on those key customers continuing to invest heavily.
Right, concentration risk.
Potentially, yeah. But connecting it to the big picture, it just shows how deeply embedded Broadcom is becoming in the foundational hardware of this whole AI boom. They're building the engines.
And is this expected to continue? That kind of growth?
Well, Hock Tan actually projected that AI chip revenue will accelerate again in Q4. They're forecasting $6.2 billion. That would make 11 straight quarters of growth, which just underscores how much customers are investing here.
That's incredible. 11 quarters straight. It really paints a picture of the strategic importance there, both the opportunity and, as you said, maybe that concentration risk.
Now, Hawktan also mentioned VMware and networking. How do they fit into the picture? Is VMware adding that stable software revenue stream?
That's a good point because it's not just AI hardware. The VMware acquisition significantly beefed up their infrastructure software side.
Right.
VMware brings all that cloud infrastructure and virtualization software, which typically means more stable, recurring revenue. It makes Broadcom's overall offering much stickier inside big enterprise IT departments.
And the numbers reflect that. They do. The infrastructure software segment, which is mostly VMware now, brought in nearly $6.8 billion this quarter. That's still up a solid 17% year over year.
Okay, substantial. And networking.
Networking is sort of the unsung hero here. You need incredibly fast, high bandwidth networking chips to connect all these powerful AI accelerators together and to connect to the massive data centers they live in. You can't really have the AI explosion without the plumbing, the network infrastructure to support it.
Right. It's essential, but maybe not as headline grabbing.
Exactly. It's a critical enabler for their whole strategy.
Okay, that clarifies the drivers. So, let's look at the segments again. Q3 fiscal 25, semiconductor solutions that includes the AI chips brought in $9,166 million.
Correct, making up 57% of total revenue and up 26% year over year, like you said.
And then infrastructure software, the VMware part mainly, was $6,786 million. That's 43% of the total, up 17%.
Yep, those are the splits. Both growing, but semiconductor solutions, thanks to AI, is clearly the faster horse right now.
Okay, strong growth in both. But growth is one thing, efficiency is another. How good is Broadcom at turning all this revenue into actual profit?
Right, efficiency is key. And for that, a really good metric to look at is adjusted EBITDA.
Okay, adjusted EBITDA, remind us what that is.
Sure, it's earnings before interest, taxes, depreciation, and amortization, but then adjusted for certain items the company feels don't reflect core operations. For Q3, Broadcom reported $10,702 million in adjusted EBITDA.
$10.7 billion. How does that relate to revenue?
That figure represents a really impressive 67% of their total revenue.
Wow, 67%.
And it's up 30% compared to last year. The CFO, Kirsten Spears, specifically mentioned their strong operating leverage.
Operating leverage, that term comes up a lot. Can you break that down simply for us? Why is that important?
It's a really powerful concept. Basically, operating leverage means your profits are growing faster than your revenues.
Okay.
It happens when a company can increase sales without increasing its fixed costs proportionally. So think of things like rent, maybe some salaries. Those costs don't necessarily go up just because you sell more chips. It shows they're managing costs, well, relative to growth. They're getting more efficient, more bang for their buck, essentially.
Yes. More profit for every extra dollar of sales.
Exactly. And speaking of efficiency and cash, their free cash flow was also a record.
Another record.
Yep. $7,024 million in free cash flow for the quarter. That's up an incredible 47% year over year.
47% increase in free cash flow.
47%. And it represents 44% of their revenue. Free cash flow is, arguably the gold standard metric. It's the actual cash the business generates after paying for operations and investments.
The real money left over.
The real money available to pay down debt, give back to shareholders, reinvest. A record number like that signals fantastic financial health and lots of strategic options.
So what does having all that cash, that $7 billion in free cash flow, actually allow Broadcom to do? For the company and for its investors?
Well, that's where the rubber meets the road, right? That strong cash flow directly fuels shareholder returns. We saw them return $2.8 billion just in Q3 through cash dividends.
$2.8 billion back to shareholders.
In one quarter, yeah. And they've already approved the next quarterly dividend, $0.59 per share, payable end of September. It shows confidence and is a direct benefit for investors.
And their overall cash pile.
Also very strong. They ended the quarter with $10,718 million in cash and equivalents. That's up over $1 billion from the previous quarter.
So plenty of cushion.
Tons of cushion. Gives them huge flexibility for whatever comes next, investments, maybe more acquisitions down the line, or just weathering any economic uncertainty.
Okay, so strong performance, strong cash flow, rewarding shareholders. What are they saying about the next quarter? What's the outlook?
They did give guidance for Q4 fiscal 25. They're expecting revenue around $17.4 billion.
$17.4 billion? That sounds like another big jump.
It would be. Represents about a 24% increase year over year if they hit it. And they expect adjusted EBITDA to stay very strong around that same 67% of revenue mark.
Pretty confident outlook then.
Seems so. But, the standard disclaimer always applies. These are forward-looking statements. They're estimates based on what they see now, not guarantees. Things can always change.
Right. Always important to remember. Now, you mentioned earlier we come back to GAAP versus non-GAAP. Let's tackle that. Why do companies like Broadcom present these two different sets of numbers?
Okay, yeah, this is actually a really crucial point for anyone trying to understand these financial reports. It's kind of the aha moment. Companies provide both GAAP, generally accepted accounting principles, and non-GAAP figures because non-GAAP, in their view, offers extra insight. The source material actually says it helps investors evaluate the results of the company's ongoing operations and allows for more meaningful period-to-period comparisons.
How does it do that? By taking things out.
Exactly. They exclude certain items that management believes aren't reflective of the sort of core underlying day-to-day business performance.
Like what sort of items?
Often things like amortization of intangible assets related to acquisitions that can be a huge number after a big deal like VMware. Also, stock-based compensation is a common one, or maybe one-time restructuring charges, things they see as either non-cash expenses or not part of the regular operational flow.
So it's not just two different numbers. It's almost like management presenting a preferred view of profitability. Is that fair?
That's a good way to think about it. It's the picture management wants you to focus on regarding the core operational health. It's not that one metric, GAAP or non-GAAP, is inherently right and the other wrong. They serve different purposes.
Right.
GAAP gives you that standardized, legally required baseline. It's essential for comparing across different companies using the same rule book.
Right.
Non-GAAP gives you a window into how management sees the business operationally, stripping out what they consider noise. So for you, the listener, the key takeaway isn't just that there are two numbers.
It's understanding why they're different.
Precisely. Understand what is being excluded from the non-GAAP calculation and why management thinks it should be excluded. That lets you assess their reasoning and decide how much weight to give that adjusted view. It adds critical depth to your own analysis rather than just taking one number at face value.
That makes a lot of sense. It really empowers you to read these reports more critically. Okay, so let's wrap up our deep dive for today. Broadcom's Q3. Clearly a picture of a company firing on, well, maybe not all cylinders, but certainly the really important AI cylinder.
Yeah, that AI engine is definitely roaring.
Record revenues, that huge swing back to strong profitability, especially compared to last year, and really impressive cash flow generation. Those seem to be the headline takeaways. We've really tried to cut through the data here, get to the core insights, and give you a much deeper feel for what's driving this tech leader right now.
And this look at Broadcom, it really underscores just how profoundly AI is reshaping the whole tech sector, doesn't it? It's almost becoming foundational. So as you think about this, maybe consider how this relentless growth in custom AI chips, the kind Broadcom is excelling at, how that might ripple outwards.
Beyond just chip makers and software companies.
Exactly. How might it reshape other industries, even ones we don't typically think of as tech? What other companies might be riding this wave, maybe less obviously? And what could the longer-term implications of these incredibly powerful, specialized, custom AI accelerators be for, our daily lives, the economy? It's definitely a trend to keep a close eye on.